What's going on, guys? Hopefully you're having a wonderful day today, and in today's video I wanted to talk about the importance of knowing when to enter the trade. A lot of times we have plans, we come up with a game plan and we say, hey, if a stock gets above X and X price, I'm gonna buy calls. Okay, that's the game plan we come up with sometimes, the night before and the morning of, or when the trigger is actually coming to happen. Sometimes it's not a good idea to actually get in that trigger. And I'll show you an example of what I mean by that and why I'm actually saying this. Okay, so for example, we had PDD today saying that at this 47 level, if we cross 47, we're gonna push higher. Okay, now obviously the reasoning behind that was that we have some resistance here on the daily sitting at around this 47 area. You can see the resistance right here, you can see the resistance right here. So that 47 area, if we broke above that, I was looking to take calls to the upside. Okay, that was the game plan. But let's take a look at what actually happened. Okay, so we could see that we came in out of the open, we actually sold off and hit this 45.10 support. Right, we hit that 45.10 support, and at this 45 area we pushed all the way up to what? Right there was our trigger point, right? 47. Now, a lot of the times people don't understand that just because a trigger is given, just because you have that trigger, it doesn't mean you should blindly just buy calls. You got to ask yourselves a few things. One, where was the stock prior to coming to your trigger on the intraday chart? Where was it? So an example here, we can see we were sitting at 45 and the stock moved straight up to 47. So the stock has made a $2 move and now it's coming to your trigger point. Okay, second thing you got to ask yourself, if I take the calls here, what are the chances that this will continue to move higher? Okay, so the issue here becomes a lot of people buy calls right at the trigger, and as the stock pulls back, they get stopped out, and then the stock continues to move higher just like it did here. Okay, so what do we got to do here to prevent this type of move? Okay, like I said, so ask yourself, where was the stock and how far has it come? In this regards, it went from 45 all the way to 47. So you don't buy the calls here. You wait for a pullback, you wait for a pattern to present itself, some sort of consolidation to take place. And once that consolidation takes place, right under your trigger or right above your trigger, that's when you take the trade. Okay, so what happened here? We actually came out of the open, we sold off, we popped up to 47, came back down, and put in a little bit of a cup and handle here essentially. Okay, so this right here, with this neckline being right at 47, could have been an area that you took your entries right there. Okay, right when that 47 broke after this pullback, you could have taken your entries there. Okay, now some people will say, okay, but this stock went from 45.70 all the way to 47, so that's an extended move. Correct, great. Sometimes that might not be the best move. So what do? You either wait for that push out, right? So we got that push out here. You wait for this push out, and then you wait for a retest, right? You wait for a retest, or you wait for some sort of a flag, some sort of a bullish pattern to come in after that explosive move right here in order to get involved again. And if you pay attention, we got just that. We had a bull flag form right here on PDD after this explosive move up, and right here could have been your second attempt or your second entry or your first entry if you missed that move up, and then this thing continued to move higher. Okay, so you always got to ask yourself, where is my trigger? Where did the stock come from, and how far up did we actually come to it? Is it extended to the upside? What's going to happen if I buy calls? Is it going to continue moving higher? Okay, so that's one way that you guys can approach this. Another way you can approach this is you see, okay, the move has gone up, it's come to my resistance area right here, my trigger point that I want to take. We penetrate it very briefly, and you're going to say to yourself, okay, I have two options. I can buy the calls here and on full size and risk getting stopped out, or what I could do is try to get involved in a little bit of a consolidation, maybe start the position here, see if it flags to break out. If it breaks out, great, you took half size and it pushed up higher. Or you can start small size and give yourself the opportunity to add on the pullbacks, and then you have full size when this really takes off. This is not something I advise unless you've been trading long enough, you understand your moving averages, you really know where your VWAPs is. Only then would I recommend it, because buying you know, starting with a half position and adding on the dip sometimes puts you in a position where you're too oversized, and if it rolls back over on you, you're going to be in a tough spot. All right, so a couple of ways to go about this. We talked about the first one: wait for a pattern. Don't go from, if it went from 45 to 47, wait for a pullback. Let the stock show you some sort of a pattern, and then kind of take the trade there. That way you guys can prevent yourself from buying calls at resistance, and then if it pulls back, you get stopped up. All right, so this is a great example of, you know, when you should take the trigger and when you shouldn't take the trigger. And a lot of the times people ask me, why do you trade the first 5-10 minutes, right? Well, I'll bring Facebook up for example for today. Okay, so Facebook was a trade that I took today, and the reason why I trade the first 5 minutes and how I look at multiple things to try to take the triggers of the first 5-10 minutes is because we get that explosive move. Okay, so for example, here we had an inside day on Facebook. And the inside day is how you trade them. If it gets above the prior day's high, which in this regard was right here at that 227 level, if it gets above the yesterday's high, which is an inside day, right? The inside day triggers at the high or at the low of that day. And today we triggered the high of the previous day. That's when you start buying calls. And I've told people, and I always continue telling people, if your trigger comes within the first 5 minutes, I oftentimes take the trigger right as it comes, right? Why? Because one, you can see we're not really too extended here, right? We didn't go from, you know, 221 all the way up to 227. The stock was consolidating right under my trigger level in the pre-market. So when the market pushed up, we weren't extended. Same scenario as before with PDD. You got to ask yourself, where is the stock? Where is my trigger? And by the time price action gets to that trigger, is it extended to the upside? Okay. So in this regard, it wasn't. The right here, when it's triggered and we saw the strength come in, I got into calls here and took advantage of this drive up, right? This is what I like to trade. First 10, 15 minutes, you get this incredible straight push up. You're out of the trade within 5 minutes and you could be done trading for the day. Okay. So I've shown you multiple ways to kind of get involved in triggers, what to look at, and you always got to ask yourself that question. Are we extended from the trigger? Have we made a significant move coming into the trigger? If so, you wait for a pullback, you wait for a pattern, you wait for consolidation before getting involved again. All right, so hopefully you guys did find some value in this. If you guys did, I would really greatly appreciate it. If you guys go ahead and smash that like button. Share this video with somebody who you think will find value in it, and make sure you hit that notification bell so when I post videos, you guys are the first one to get notified. All right, thank you for watching, and I'll catch you on the next one.